Hey everyone, this is Kirk here again at OptionAlpha.com, and in this video update, I want to explain the concept of laddering trades because we talk about it often here at Option Alpha. It's something I've been doing for a long time, and I just want to make sure that everyone's on the same page as far as how we do things. So I often get questions like, what is laddering? Why do we do it? Why or how should I think about laddering positions? What is the impact on position sizing? And then the last question usually is, do I have to ladder trades to be successful as an options trader? So the answer is that laddering is a concept of breaking your trade into smaller steps or positions that are spread out over time. Our backtesting 100% confirms that laddering across time and price is both more profitable and generates higher expected win rates. So here's what I'm talking about. Instead of entering one big trade of, let's say, 10 contracts, instead of doing that, do, let's say, at the very basic level, 2 trades of 5 contracts and 5 contracts, right? Or do 5 trades of 2, 2, etc., right, out into time. So it's this idea of, instead of doing one big position every month, every week, etc., spread your trade entry out over time and price. And that means that you're going to be moving with the market as the market moves high or lower, etc., etc. I'll show you how we're doing it here. Actually, just even in this last month and a half, we've started to do this in a current position that we have in FXE. So you can see here that we've got a bunch of sets of iron condors that we've been trading, right? So we have the iron condor here. This is a set of 2 iron condors. Then we have another set here and another set here. And then finally, our 4th set here, which we're starting to build out into the February expiration month. Now, again, the whole idea here is that we could have done one big trade for January of 6 contracts, or we spread them out into 3 sets of 2 contracts, right? So whatever you want to do, you spread them out into whatever groupings you want to do, 2s, 3s, 4s, etc. And there's no hard set rule about anything. So there's no, you don't have to do them every 3 days or every 1 day. I'm just saying spread your trade entry out over time so that you average into pricing and average into the security. And what you end up getting is you end up getting a P&L graph or P&L diagram that's much wider than, say, an initial position. So now our new position, kind of with everything included here in FXE, is really wide from basically 100 up to 105, which is a pretty decent range for the stock basically for the next month and a half or so. So if you look at the stock now, you can see we're down here at 100, and then our top side break even is at 105. And so as the stock kind of fell over the last month and a half, we've averaged into a position that's helped out with this thing overall, and continued to sell premium as volatility's generally been high. So when you look in here to the actual trades themselves, and let me just click on these, you can see this one was entered into on 11/21. This set right here was entered into on 12/5. Then you got another set here. This set was entered into on 12/23. And then finally, we just entered into another set for February expiration on 1/3, so in January 3rd. So notice, again, there's no set timeline or strategy as far as has to be 2 days apart or 1 day apart or et cetera, et cetera. It's just spreading the trade entry out over time so you increase your occurrences, increase the number of frequency that you have. Now, of course, obviously, we can choose to manage these independently or separately, whatever you want to do. Again, there's no right or wrong way to do it here. We choose generally to manage each of these independently as trades, usually if we have a lot of sets like this. So we'll create closing orders for each one of these and just continue to let those automatic closing orders work. But that's really the concept behind laddering positions. And again, the whole idea here is that you're moving and averaging with the market. So if we go back to FXE, right, our first position was in basically the middle part of November last year. So stock was right around here, right? And then we got into another position and another position and another position and another position. We're just continuing to move with the market and always be neutral around that stock price so that we maintain a pretty much delta neutral or as much of delta neutral portfolio as we can. So hopefully that was a good little conversation about laddering trades. Obviously, if you have more questions, please let me know. Search the website. Check out the rest of the videos inside of this knowledge base here on the website. And also check out our FAQ answer vault, which has a ton of other questions and detailed written answers from me. Until next time, happy trading.